Hi, this is Brian with the Retirement Network and our second quarter 2019 update. Remember, at the Retirement Network, we try to reach client goals with the least amount of risk possible. Okay, speaking of risk, it's earnings season, and you've probably heard the term earnings recession. It's been thrown around a lot as of late. And is this something that we need to worry about? So we're going to jump in and dissect that a bit and see if it is something that we need to worry about. Before we start defining, our last video was on headline risk, which is the risk that a media article or a video generates some kind of poor investor behavior by using emotionally charged words. We think there's a little bit with earnings recession in that, but we need to define some terms first before we get there. So first thing we're going to define is a recession. What is a recession? A recession is, first of all, the term is typically used for GDP or the gross domestic product. And a recession is generally defined as a period of economic slowdown for 2 consecutive quarters. That's it. That's the definition of a recession. It's 2 consecutive quarters of slowdown and you have a recession. Now that we have that defined, we need to define what earnings are. And earnings is really just a fancy word for profits. And anytime you hear the term corporate earnings, we're really just referring to corporate profits. Now, earnings are reported on a quarterly basis. And you can argue that that quarterly reporting is bad in and of itself because it leads to shorter term thinking and planning rather than longer term planning. But that's a topic for a whole nother video. Now, there is, of course, fluctuation and variance in these quarterly earnings. Sometimes a company can beat their earnings, sometimes they miss. And sometimes there are disasters like we're seeing with Boeing right now, or there are seasonal issues that come up. There are a lot of reasons to create these misses in earnings, and that creates a lot of volatility in the market. Okay, so now that we know what a recession is, 2 consecutive quarters of declining growth, and what earnings are, which are just profits, what's an earnings recession? So an earnings recession is defined as 2 consecutive quarters, 2 or more, of declining growth year over year. That's it. So are we in an earnings recession? The average earnings since 2009, so the last 10 years, has been about 9% growth. Now, there is no magic earnings number to hit, and it's not written in stone. That 9% is not written in stone. It can be quite high, it can be negative even. There's quite a bit of variance there, but the average has been about 9%. Last year, 2018, we had about a 23% growth rate in earnings. Now, it's believed that about half of that came from the corporate tax cuts, and that was a one-time thing, right? So, knowing that, and knowing that a 23% growth rate is pretty high compared to the 9% average growth rate, are we in a recession? We like the term slowdown or back to normal better than recession because that's really what's happening, number one. And number two, it doesn't incite any type of panic with investors. What a concept. So earnings recessions have happened before. They have led to, about half the time, it has led to a regular recession within 2 years. Half the time it hasn't. Then there really isn't any discernible pattern there. So we want to keep focused on the long term. Take what you hear from the media with a grain of salt, and sort of take a breath and understand that it's probably not something to worry about, at least yet. Okay, that's it for this quarter. And remember, at the Retirement Network, we try to reach client goals with the least amount of risk possible. Thanks for watching, and we'll see you on the next video.